The Bank of Canada's interest rate announcement takes place on June 5th. So we could just wait for the announcement and then break down the results. But we have so much information already. So let's see how accurate that information ends up being. On April 10, 2024, the Bank of Canada decided to continue its policy of quantitative tightening by keeping the overnight rate at 5%. But their report left a few clues that could give us some insights on what to expect next. The Bank of Canada based its decision on inflation numbers, which looked better than they anticipated both nationally and globally. The US economy also seems stronger than expected, and global GDP growth had increased. However, Canada's economic growth stalled in the second half of 2023, and unemployment has risen to 6.1% compared to 5.1% this time last year. The financial policy report does suggest that Canada's financial system remains resilient, although, and this is the important part, the main risk factors to our financial stability will be our debt serviceability and our asset valuation. Variable rate mortgage borrowers have already had to start making additional payments to manage the higher interest rates. Now, more and more fixed rate mortgages are coming due, with significantly higher payments being required upon renewal. Outside of the Bank of Canada's report, we've also been hearing more consistent rumblings that the interest rates will be decreasing soon, largely because of the CPI, the Consumer Price Index, having dropped within the target range, meaning there's no need to continue a policy of quantitative tightening. But the reports coming out of the major banks also warn that house prices will continue to rise once interest rates begin declining. So the Bank of Canada has to balance debt serviceability with rate decreases to ensure that we don't accidentally inflate the housing market unreasonably. These insights point towards a much slower decrease in interest rates over time rather than just a sharp decrease. Because of this, most experts believe there is a 0.25% decrease coming on June 5th's rate announcement. However, other specialists believe that the Bank of Canada kept rates too low for too long, so reducing rates may not be in the cards just yet. Anecdotally, I was having a discussion with a friend a little while ago, and he had mentioned that they won't start reducing rates until there's metaphorical blood in the streets, meaning enough people feeling serious financial pain. I think people are starting to feel that pain currently. But the fixed rate mortgage renewals from 2019 and 2022 are just around the corner. And with the CPI in target range, I think it would seem a little bit irresponsible for the Bank of Canada to keep rates where they are right now. But that's just my opinion based off of the information that we have currently. So with all of that, what do you guys think is going to happen with the rate announcement on June 5th?